to this channel. And on this video I will be basically teaching you guys how to trade from order blocks or S&D zones. Now first and foremost, we need to have our setup, right, which contains our structural narrative, our area of supply and demand, or the order block itself, and then that confirmation. Now most of people, there's two types of actually trading from order blocks like this, right? So first and foremost, there's you could have a structural narrative set out in place, right? For example, right here, this is a bearish market, right? As you can see, there's a series of creation of a low, right? Price comes up, forms a high, and then price comes down, breaks this low, and then forms a lower low. So from there, we know that the context of this market is pretty much bearish. Now, like I said before, there's two types of trading order blocks, right? First, you could have, now, for example, a bearish market, right? You could have something like this, which particularly shows that there is a break of structure at some point in there, right? And once we have that break of structure, the next thing we're going to have is that order block, right, or an area of supply that obviously we'll want to see price from here make its way up into this area, mitigate, and then from here drop and then target this low as our next liquidity run area, right? We just put a $sign in there. Now, like I said before, there's two types of trading in this area. Somebody, type 1. Let's talk about type 1, right? So we'd have an S&D zone like that, and somebody from there, right, somebody just put the trade like that, and then just sit back and wait for price to play out, right? But of course we're always targeting this low here as our next liquidity run area, right? Now there's this type of trading from order blocks, right? You could just set your trade there, your limit order somewhere here. For example, a sell limit here, a stop loss just above, and the take profit target at this low here. Now that's one type of trading, right? And price would normally just come there, trigger your entry, and then from there price would basically just go down and then hit your take profit target, or price could just do this, right? Price could simply come here, play around, and then just take you out, and that will be a loss. It's fine, right? It's part of the system, it's part of trading. Now that's one type of trading, right? And the second one is actually having a zone like this, and then having some sort of, I don't know what, an alert maybe for in that area there. For example, let's just put in a horizontal ray with an alert that if price taps here, then it should alert you, right? And assumingly that price does come and make its way into this area here, and your alert of course goes on, right? And then when you come now to the chart, what do you want to see from here in order to take that trade, right? So okay, I want to pull this here, make this a little bit wider, and then leave that illustration there. So let's assumingly say that price moved in this sort of manner and then came to hit our point of interest, or our order block, and from there, this is what we want to see, right? We want to see price going in a bullish trend and then losing its momentum, a little bit of accumulation, aka consolidation, and from that we want to see a break on either side to take that liquidity, and then later on we want to see a break of structure to the downside, which will indicate that this price is more than ready to go bearish, and from there price could literally just move bearish from there. So this is what we want to see, right? We want to see price in a normal context, right? So let's just remove that. Price could basically come into this area, and after price reaching that area there, what we want to see price do is simply accumulating, right? And after that accumulation, right, price could now make a move to take liquidity or whatever, and then break down. Now basically the most important thing that we want to see is a high, right, a low, a high, a low, right, a high, a break of a low, and then a retest, and then a re-break of this low, and then a retest, and then price from here could now just move as it wants to, right? We want to see price in the intermediary structure, of course, head to that area, right, and then give us these structural breaks to the downside to show us that price is ready to go bearish, aka that is our confirmation that price is going bearish from there. Now that's the second type of trading. Now with illustrations now. So take this as our setup, right? So let's just remove these and have a very proper setup there. So basically we would have a break of structure right here, structural break just about there. We'll name it as a BOS, and then we'd have a lower low, a lower high, and then a lower low. Now we want to see price coming into this area, right? This the last buy to sell, which is our order block. And then after price coming into this area, we want to see price contain within this area and then distribute from here to come and take out this high, hence forming a new lower high and then coming to form a new lower low somewhere down there. This is all we want to see from this area here. Now type 1 trading is would basically have a short position opened in there, right? And then the stop loss is just above the area, and then we're looking to target this low here, of course, as our next liquidity run. So this is what we'll name this low. Sorry, I want to hit this ray and then mark it as next liquidity run. So this is type 1 trading, right? And let's see how that plays out. So price moves around, okay, boom, taken out. Why was this taken out, right? So we'll go back in here, zoom in a little bit, right? And then see that price came and just took out the high, and then price continued going down. Okay, so this shows that, okay, it was just a simple absorption, a liquidity grab to just take the liquidity existing above this swing high right here, and then price could now distribute off to the lows. So this is the basic and major disadvantage of this type 1 trading. Now let's see how the type 2 trading could have worked and what would we have gotten off of there, right? So let's go and replay this from this absorption here. So there we are, and now from there we'd go back to the 1 minute chart and see what was price doing. So in a basic and simple analysis of the 1 minute chart is that price was pretty much in a bullish trend there, high, a low, right? And then this high was taken off this body here, so a high high, a high low, right? A high high. So pretty much ranging from this low to this high here. Let's play price out and see what happens. So price plays around and never goes below this low here and closes the body. So it's only wicks going down, which is just a simple absorption, and we're still in this range of this high to this low. So we're still waiting for a move to happen. So we're still in that range, and then lo and behold, boom, that there happens, right? So as you can see, let me just go back. Did this break? I'm curious to see if this did break. Yeah, boom. So yeah, this did break. If we can just zoom in a little bit. So as you can see, there's bodies of candles closing above this high here. So yeah, I mean, we're having a high high here that originated basically from this low here, right? So price makes a high, makes a low, and makes a high high, and then what happens is that price comes up. Okay, let's cut it again from there. Okay, so all right, so at this point we're pretty much ranging from this low here to this high here. So we're looking to see if this low gets broken to indicate that price is ready to go bearish from here, or if this high is broken to indicate that price is still bullish and no entries are to be taken, of course. So let's play price out. Boom. So price goes up, makes a high, and then comes down and takes out this low here. So now we have a break of structure here. We have a break, a structural break right there that originated particularly from this high here and this low here. So now we're in a range of a high and a low, right? We need to find that last buy to sell in order to, you know, use it as our place in which we're going to take that entry to go short. Lo and behold, that buy to sell is pretty much this place here. Boom, that's the last buy to sell. All right, so we can now just delete this whole thing here, and then let's play price out and see if price. Okay, so we can, at this point we can now just do this and look to protect above the high, of course. Let's see if our entry gets tapped. So price plays around, and then nope, price never touches it, and then re-breaks bearish again. So we omit this and we omit this. They're out of use as of now. So now we have another break of structure here. And from this break, we have a break, and of course we have that last buy to sell, which is internal order block, right? We also have a last buy to sell, right? Boom, right there. And with this last buy to sell, we can do this once again, right? We can just place our sell order there and look to protect just above the high. And of course, we're looking to target the overall low, right? So this is our main take profit target all the way down here, right? This low right here. Boom. So that's what we're looking to target as our take profit area. Now, lo and behold, let's see what happens from here. So price comes in, triggers our entry, and then distributes, right? So with this distribution, let's see how do we manage this, right? So we have particularly a high, right? A low, a high, a low, and then a low, right? With this break right here. So with that break, we're just looking for price to retest and then make a re-break at this low. Once this low is broken, this trade goes straight to break even, right? Boom. So let's play this price out, and then there we go. The low is broken. My trade is already at break even, right? So this is how we trade at the Green Pips FX Academy. And if you want to join, guys, just DM us on Instagram at official Green Pips FX, and we'll be more than happy to receive you guys into our fantastically growing community. It's absurd, guys. So let's continue with the video. Let's just not get carried away. All right, so price now just simply plays in there. So as you can see, we have our trade still running with a 4 pip stop loss and a 156 pip take profit target to make it a 1 to 39 RR trade, guys. So this is how insanely we trade the MMC footprint strategy in the Green Pips FX community, guys. And as you can see, our take profit target is instantly hit in there. So this just took so this was like Thursday, and this is Friday. So yep. I mean, like, yeah, so this is Friday midnight. It's like 5, it's, yeah, almost 5 a.m. in the morning, and this is Thursday at 22 hours or 10 p.m. in the night. So as you can see, guys, this is the beauty of the MMC footprint strategy. Within a couple of hours, right, less than 8 hours, you're already secured 38 RR, which is enough to pass any you know, if you're doing an FTMO challenge or whatever. So I hope this video was very informative to you guys, and if it was, then, you know, don't forget to like, subscribe if you haven't, turn that bell button on for notifications. Until the next one, guys, stay safe, have a nice trading week, and peace out.